Hi, everyone. How are the Face Warriors doing this morning? Hi, Vince and William. Who else is in the house? Exciting weekend in New York. The boys are back in town. We'll be there. How are you, Thomas Hendricks, Stephen Marshall? Hi, Scott Pickering. Everyone doing? Hi, Paul. Okay. So, been talking for a while about the euro having the potential to get to 113.80, 114. It's been achieved. Came back and tried it again and took out this high, I think, by half a pip. Today's close and the weekly close is going to be important in the euro. So you really don't get a sell signal on the weekly till about this candle's close on the weekly comes in at 113.57. But to me, it looks like we're going to be good or bad from this area. Talked about it earlier in the week, and 96 being important in the Dixie. So probing shorts over 14.25 or so on a close. I think you have to go with the long side. Things are shifting. Otherwise, I still believe that there's a shot for one more new low. In fact, when you look at the daily here and you look at the low here, there really was a little divergence between here and there, but almost looks like a confirmed low to me. So possibility that we get one more low in the euro. But here again, it's 1340, 1350. I'd say back under, this should seal it back under this moving average. Your first danger signal would be back under 70, that the euro is topping, and maybe we get something like this from here. The dollar will firm it up underneath a line that I've had drawn for a long time. Here it is. So if we got back over, say, 96.20, that could seal it for maybe the next wave up in Dixie. Right here, 96.16. Shorter term, getting a little divergence. Right here. Maybe this is a second drive. Could go for a third. And the S&Ps are under pressure. So when we started off Monday, look, I was talking about the potential of an outside week to the downside. The first step was taking out with a gap last week's highs, which it's done. And the second step is beginning to trade lower on the week, and we've done that a couple times. Last week's close was 79.10. So we're about 7 handles lower on the week. And the final step would be by Friday to take out last week's low of 27.63 and finish there. And then you'll have a pretty negative candle for the week. And then you have some immediate support at 27.32. But a lot of different work. Greg, Andre, I think 26.30 or so, which is 38% back, is viable. So I'm in agreement with them. Also, we've had a recovery in the crude oil market to 61.8 back. The guys are doing looks like we're above 61.8 back now, or right around there. The team is putting together, I don't know if it's published yet, a blog on crude oil. So we'll see. So if you're bearish and you miss the first wave, down here on the Trump tweet, this could be a good area. Not sure if there's a pip on it or anything. You have to give it the highs. So, you're risking over 100 pips, but perhaps you get at least this, which I think was 270. And if you got 1.618, that'd be about $4 from there. Take you back down to the support level around these lows over here. So that's what I'm looking for in crude oil. The metals, I keep getting asked about them, and I just can't sell them in their flat range like this. Silver's acting a little bit better than gold, but maybe if we get a sell-off in stocks, we'll get a better shorting opportunity, maybe up here around 1336, $8-10 rally. And silver was, I don't know what this stuff is, but it's the opposite of what we've been seeing. Steve, in his new car, Steve Andretti, has other favorite he has other favorite race car drivers. So I don't know, maybe this was a fat finger or something, but maybe silver still tries 16, maybe even it tries another high. Here's 1, 2, 3, but I don't think we're done at 1570 on this correction. So again, perhaps a lower high in the silver for short. Yields have collapsed, and just a quick look at Bitcoin. That was a pretty serious decline in Bitcoin here. Still no sign of a low. If this completed wave 1 all the way from the bottom, this thing right here, of 3, because this was 1. Here's my amateur Elliott wave count. And this was 2, and this was 1 of 3. So I want, sometimes we can retrace 61.8. I have the other fibs drawn, so it could be important to see it hold at least, above this last consolidation area, 3,600. We'll see if it gets that deep. Don't think this is going to lead to a crash in Bitcoin and take out the lows, but time will tell. And I want to remind everyone that the best, one of the strongest Forex team of traders is right here at ForexAnalytix. And here's a reminder on the website, register now, and you can meet the guys. And maybe Blake has decided, since it's only a few days away, are you going to join the crew, Blake? And while I'm at it,
hey, Coach.
Hey, buddy, are you going?
Wait, hold on. Oh crap! I just dang it. Sorry.
Yeah, don't worry about it. It's okay. So also, guys, don't forget to call Justin and Trent. All right, for your reimbursement on the subscription or a rebate check, either or, a broker of brokers. So call these guys and find out if you're with the correct broker. And there is no law against having more than one account. In fact, it's good to have a comparison. So, you could keep your account open another one and then see if they're right by who they referred you to. Okay, bro.
Hey, I was in the middle of closing out some positions.
Okay.
No, I have not made the decision yet if I'm going to make it there or not. I'll decide by the end of the week. I'm setting up things here on personally. So actually my close date happens to coincide. It's a moving target with our home. We have sold one home and we're buying another. And like I told you guys before, it's like a lateral move. It's not not like I'm buying like a huge mansion or something like that. It's more of a closer to kids school type of thing. But it's because of the way the loan structures are, it's closing out one loan, getting another loan, making sure everything's tidying up. And my close date actually, ironically, is a moving target, but it is right at the on the money show. So
yeah.
So
how are home prices holding up there, Blake? I'm reading.
They're great.
They're still very strong.
Here. Yeah, in Phoenix they are, because inventories are pretty low. We still have a major influx of people, so that's the downside to where I live at this moment, is the inventory is just super low. And we got so many people coming in from all over the place. A lot
from California, probably.
From California, believe it or not. Yeah, I mean,
I believe it.
As much as I'd way rather live in California for the weather, people don't want to live in California because of the taxes and the weather.
I call California is a state that you have to get a permit to get a permit.
Yeah. Yeah, it's well, between that and then, I've watched people, the state of Arizona, just for those of you that are around, different parts of the world, and you're like, and you don't know, and maybe I'd venture to guess that half of you have never even been to the United States. It's a beautiful place. It's hot in the summer. But in the winter times, it's gorgeous. For 7, 8 months out of the year, it's absolutely gorgeous. I would say 8 months out of the year. And the problem that we have here is that it's such a destination for so many people. So you got people from the Midwest where it's like just freezing cold. They want the sun, and they don't want, they just want the sun. And then in California, we're getting a lot of people moving back this direction because prices are too expensive, and from taxes and real estate, and so we were the fastest growing county in the United States last year. So and that's Maricopa County, which is the county I live in. So I mean, it's keeping prices higher, and inventory is low. There's not enough homes here for people to move into. So prices have been stable
like
and high.
Thing. Yeah, especially for starter homes. There aren't any.
Yeah, there are not. And so anyway,
well, you could bring a tent and live there outside for 6 months a year, 7 months a year.
Yeah,
pretty nice. Blake, I lived there for a while. That what always amazed me is why people settled there before the invention of air conditioning, because when I lived there in the all the way back in the 80s, I lived in a house that only had a swamp cooler.
Yep.
And it did nothing during the monsoon season to cool off the house.
No, but during when it was dry, it sure did. And
they worked then.
Yeah, we've had swamp coolers in our homes as I was growing up, and my current home does not. But
what hardy souls to settle in the desert before we had those modern conveniences to take for granted, don't you think?
I just remember growing up here with just a swamp cooler, and in the middle of the summer being just sopping wet in my bed as a kid. I remember that. Anyway, okay, well, let's stop talking about well. Let's talk a little bit about the market. So the euro, it was interesting yesterday. The euro rallied right off of this trend line support. You can see here on the hourly, and if you use ForexAnalytix and you get the basic technical analysis, you have to imagine this is the analysis that I'm updating throughout the course of the day, and a couple other, Steve does and Paul Franco does, but as well. But I happened to update this yesterday, that the euro dollar is nearing the triangle wedge support at the 113.45 level. Bulls need to make a stand near current levels. If not, the risk of a breakdown is apparent. So we were right down at support. We did pivot, and the euro dollar is higher out of the bullish wedge, and we are now testing the 50% retracement at 130, 113.98, 114 basically. RSI is just reaching over bot. So we went from this
to the breakout.
The breakout, it would be this one, to the breakout, testing the 50%. Now this morning, what you'll notice is, the euro dollar is struggling with the 50% retracement and possibly forming a double top, especially if we drop back below the 113.80 level. And you'll notice that we have this double top. We've been as low as 113.80. So really, I think that the number is now you got to look at 113.70. In the event that we break through here, then we got a nice double top formed, and then you can start looking to short the euro. I do not have any exposure in the euro. I was short the euro pound up until about 10 minutes ago. So I've been riding the euro pound short. Anybody here, and I can talk to the audience really quick, is anybody short the euro pound? Anybody? If you were short, from yesterday and the last 2 days, congratulations. Scott says he is. I just closed mine at 44. So we went as low as 42. I closed it at 44. Looks like we're trading right around 50. Now, one of the things that I have an issue with, Scott says he is still short, it is that we are divergent on relative strength and very oversold. So I am, just so you guys know, I am looking to short the euro pound again. If we can get a rally towards 86, I'm going to look to short any type of rally now. So that's my plan as of right now, is to short any rally back towards 86 pence. I do want to be short the euro pound. Predominantly it's because of the cable. If you guys read the Tiana said still short the euro pound from 88.40. That's nice. Oh, it's such a nice trade. I wish I had such good position, because I'll come back to the cable here in just one second. I was short yesterday or Friday. Wait, what's today? Wednesday? No, Monday. So I shorted on Monday at 86.70 here, so 86.80, something like that. I shorted a very aggressive position, and frankly, I did really well. So
I'd like to tip my hat to Tiana. People say good call, great trade. The toughest thing is great hold.
Yeah, great. It's being able to hold there. Yeah, I mean, if you're short from the top tick, like a false breakout, that's awesome. I mean, because there's no reason for you to cover. Only reason for you to cover at this point is if you get a move back above 86.40, and that's, for me, that's the only thing that's going to turn the tide from being short. So if I get short at 86, let's just do this. If I get short from 86, let's just say you and I get lucky and we get a move back up to 86, and then I can establish a short position again, or reshort it up here. Then the only way that I'm going to get stopped out is a move back above 86.40. Okay. That's the only way that that's where my stop is going to be. And that's where, I have to shift from being bearish the pair back to being, bullish or trading into a range. But at that point in time, I'd actually turn bullish. At this point, it is a very bearish move, and I plan on continuing to be on the short side. I stagger, just so you guys know, I stagger orders, and that's one thing that I was dealing with just as soon as I came on, as I forgot to adjust a couple orders. I have orders stacked like this. I'm not going to give you the exact prices because I don't want to, tell you this is where I'm shorting, this is it, and this is my stop. And I want to give you guys, because I'm not here to give you a buy, sell, or hold recommendation. I'm just trying to give you my plan. I'm shorting. I have orders that are short like this. So if we get a rally to 86, let's say at 85.70, I might have some there, and then at 80, and then and then I'll stagger into a position with stops above here, so I can build a position on the short side with stops above this level, but I'm still looking for a lot lower levels. Matter of fact, I'm looking for sub 85 pence level. I'm looking for 84.70, if not even lower than that. So that's how I'm playing the euro pound right now. Like I said, I covered it already. I feel a little naked that I'm not short right now at this moment, but I also feel that I've done good. I just hope it gives me another opportunity to get on the short side once again. Now, one thing that I'm a little hesitant about is the cable. So the pound is at 133.15, and this is, if you read the blog yesterday. So here's the ForexAnalytix blog. You can get just you can get my views on how I feel about the pound. This is a big inverted head and shoulder pattern. If we can clear 133, like let's say 30, and hold it, the highs today are 133.36. Excuse me. If we can clear that and hold it, I will be looking for a much bigger move, towards 140. I mean, this is, if you look at what we can extend here, this is the move that we're looking at. Hey, a really quick, Stelios. Stelios, are you
Hello,
here?
sorry, I was looking for the unmute
Oh,
button for
no,
a while.
I do that all the time. Hey, really quick, I know
Yeah.
you have to leave. What time are you leaving? Do you got to leave?
No, it's okay. I just have to leave 5 minutes before the interview starts, so I'm here for the
Oh,
rest
okay.
of the
Okay, great.
yeah.
All right,
Yeah.
all right. So, hey, just go ahead and save your voice. I'll bring you on in about 20 minutes or so.
Okay, cool.
Okay. So, so the pound, in my opinion, is, you know, on a breakout, we're looking at an inverted head and shoulder pattern pointing us above 40, 140. So I'm bullish. I'm obviously a little careful. That's why I'm not just staying short the euro pound right now, because I'm a little careful as we're at this neckline. This is an important, between here and 134 is going to be extremely important for the pound. There's obviously a lot of headlines that are surrounding the cable right now regarding Brexit and Theresa May. We got and actually I probably need a little help from Amanda, because I had to update all the key levels and everything else. We from what I remember, we had a meaningful vote this morning, but I haven't been able to read through all of my news. I usually read through several different articles in the morning. I just didn't get a chance to this morning regarding.
I can help with that if you want, Blake.
Okay, yeah. So really quick, if you can sum that up.
Very quickly, today they're voting on the Cooper Amendment, which basically is a law that.
Now, this is a new vote. This is we voted on this before a few weeks ago.
Maybe I've actually lost count. I'm sorry.
I know it's really no. It is so god awfully confusing, especially for those of us not in the UK. You know, I thought the Cooper Amendment was voted on, and when it was coming up again this week, I'm like, oh, didn't they just vote on that like 2 weeks ago? But anyway, go ahead. I'm sorry. I know it's a Cooper Amendment.
That's Amanda is saying actually it's due tonight, nothing to rock the boat, as May has done a U-turn on letting the Parliament vote to get a no deal off the table. So basically, this amendment is to add a law that puts safeguards to prevent the UK from leaving without a deal. That's it.
Okay,
so
now
that's what's happening today.
That's a big deal, because the market has got to reprice and is currently in process. Let's not forget, is currently repricing the idea that there will be no deal Brexit. If we know that Parliament doesn't want a no deal Brexit, let me restate that.
Hey, is the Cooper Amendment Bradley Cooper's push?
No jokes. No jokes. Hey, we're trying to keep this straight. All right. So if they vote on the Cooper Amendment and they choose that they don't want a no deal Brexit, okay, Parliament doesn't, then we know that we're gonna, unless something goes completely south with the EU, we're not gonna, or the UK is not gonna leave the EU without a deal. So the market is currently trying to reprice that back in, which in my opinion would put the pound somewhere towards 135, because the reason why the cable was down below 130 and was trading towards mid 120s is because the risk of a no deal Brexit. Is that correct?
Is that question to me?
Yeah.
Yes.
Well, no, that was to you know. I mean, of course, it's talking to you, but the market's got to reprice it, and that's why you're seeing the strength in the cable. So if we know that there's going to be we're not leaving the UK without a deal. It may be a shitty, excuse my language, it may be a crappy deal, but we may leave with, we're not leaving without a deal, then the market is repricing that currently. And that's why the cable's so strong. So that's why this is a very important vote today then, right?
Yes, that's correct. And remember, we've said for a while that the no deal Brexit is the only, in my opinion, negative sterling scenario. Every other scenario, they will fudge it, they will fiddle things, and they will somehow probably come up with something that's mutually acceptable. But yeah, you're right, Blake.
Okay. So if that's the case, then, we have a situation where the pound could be higher. I wouldn't say substantially higher. I'm not sitting there looking at the pound going, dude, we're going to 160 right now. Could we trade up 135, 136, back to the 618, back to some of this resistance that we saw back in May of last year. Yeah, I think that's very doable as the market reprices a deal. Not necessarily a great deal. It may be a really crappy deal, but we're not leaving without a deal. And so that is why the pound is as strong as it is. That's why I think this is important. Now, with that being said, I do want to be short the cable because I am in the camp that the UK is not leaving without some sort of deal. It's good because it's not going to be good for Europe, and it's not going, and everybody in Europe knows that. It's not going to be good for the UK. And so then I got other comments from some people in our chat room yesterday that said, well, Blake, if but the pound's rallied so much, but the UK economy is so weak. There is massive. I have to imagine there's massive pent-up demand, not only from a business standpoint, but a consumer standpoint in the UK. Look, if I lived in the UK and I needed a new dishwasher, I would be very hesitant about buying a new dishwasher. Like, I don't know if I want to spend £1,000 on a new dishwasher because what if things go south and and then I have to save my money because our economy really goes in the crap hole, so I don't want to spend that £1,000 right now on a new dishwasher. Well, what happens if if we know as a person living in the UK, okay, we're gonna we might leave the EU, but it's not going to be on a no deal term. I might be a little bit more apt to spend money that I wasn't going to spend before, or if you're a business, like I'm not hiring. I need to hire 10 people right now. I've got a small business of 100 people, but I need to hire another 10 bodies to do this job. But I'm real hesitant about doing that, because of the uncertainty. But if you you remove that uncertainty a little bit, there's all this pent up demand that I think is going to put another boost back into the UK economy, in my opinion. So the numbers that we see now, they're bad. Of course they're bad. Why wouldn't they be bad? I would think they'd be bad, but I think they're going to only improve if you remove some of this uncertainty. And I think that's why the cable is getting such a lift. And so if you look at the economy, you go, well, there's such bad data, and it's going to, I think that the UK economy would stabilize a little bit, knowing that there's some sort of light at the end of the tunnel. Correct me if I'm wrong, or maybe interject some thoughts here, Stelios, if you want to.
No, I think you're absolutely right. That's what I would do, and if I was in a situation like you described. So yeah, I agree.
Okay, so that's why I don't think that I don't and again, you look at the pound and you think about, like, you can go back to the roaring 2000s and go, well, the cable was above 2. Yeah, we're not going back to 2. I'm not even saying we're going to go even halfway back to that. But can the pound push back towards 140, back towards even the post Brexit move? Remember, just last year we were trading up at 143. Could we push back to 135? Could we push back to 138? If you remove some of this uncertainty, I think so. And like I said, I'm not sitting here going, well, we're going back to 160, but look, if the UK leaves the EU with a half decent deal in the next 6 months, we could be trading back at 150, but do I think the UK economy is going to be hampered for years moving ahead? In the next 2 to 5 years? Yeah, I do. But I think overall it's going to be a better thing for the UK longer term. Anyway, I'll get off my box, but we really need to talk more about the here and now. And I think we have some data coming out. Hold on, let me double check that.
We have Canadian CPI.
All right, and let's go take a look at the CAD. 20 seconds, stand by. Let me watch CPI here.
Some US data later today, but not now.
All this data. Watch the year over year. Expecting weaker Canadian data. In line.
CPI
In line.
marginally weaker, marginally lower, 1.1. So nothing really major.
Nothing. Yeah, not a whole lot here. Okay. So it's just basically in line. Nothing to write home about.
Yes.
Okay.
Our friend Scott is saying the Blake rant is back. Yippee! Yeah.
Sorry. Sometimes I had to. When I did the morning edge, I would spend an hour and a half with our traders every day, and I can go over the charts in 45 minutes. So I'd have another 45 minutes of just ranting about on my thoughts and ideas, and so sometimes I have to get off my box, realize that I'm on a box, and then get off of it. But the dollar Canadian's getting a little bit of a lift here, which is good because I'm short some Canadian yen. I'm short some Canadian yen as we are, by the way, we are in an ascending wedge. I should delete this really quick. I was looking at that possible Gartley. We're in an ascending wedge here. I think the S&P is going to eventually roll over, so I don't mind being short some Canadian yen, but below 83.70 as I get aggressive, because this is previous breakdown point. We're just kind of trudging higher. I think a break back below 83.70 and I get aggressive. But anyway, I'm just short a little Canadian yen. All right, let me go through some other charts really quick, probably for the next 10 minutes, and then I'm going to hand it over to Stelios. One of the things that makes me a little nervous too, not only the euro dollar that might have this little double top here, look at the Kiwi. The Kiwi, false breakout up here. We're in a triangle. We're breaking down. And so with that dollar strength coming through some of these commodity currencies, like, you see the, Kiwi dollar breaking down, the Aussie dollar showing some signs of weakness as we get back towards that 618. It makes me a little hesitant about the cable being up here. I'm a little nervous about this. But if you notice, like the pound Aussie, I'm such a bozo. I was long the pound Aussie earlier this week at 82.60, I think, and I sold it at 83.30. I made this, and I thought I was a superstar. I made that right there, and I thought I was king poop, and that was 300 pips ago. I'm king poop, all right, great. We just hit 161% extension, and we went above new trend highs. So now any dip towards 185 is going to be bought. This is a really strong uptrend. That's why, and you guys know that this is a chart of the day, just so you know, from last week. This is the chart of the day from last week. You guys, if you don't read the blog, you don't have to be a ForexAnalytix subscriber. I hope you would be, because then you'd be in our community all week long, all day long. And here's our community. You guys want to, whoops, sorry, I got to refresh that. You guys can say hi. I'm put you guys on Jumbotron. That's where I'm at, and we've got 96 of us in there right now. That's where I chat all day long with, you can see there's Polly, there's Stelios, Amanda's right here, and then Martin, that's funny, please free me. Chad, you guys think you're funny, but you're all not that funny, just so you know, you're not all that funny. Anyway, they're really good group of people in there. Anyway, yeah, if you're not part of the ForexAnalytix community and you're not in the chat room with us all day, then at least read the blog. I mean, the blog's free. At least you get one chart a day versus 100 charts a day, but at least you can get one, for crying out loud. So anyway, but the pound Aussie, obviously, it's been a nice bullish move. Pound New Zealand's testing trend highs too. This thing breaks out. We're looking at 196 to probably back to 2 again on the pound New Zealand, and you see how the Kiwi's responding here. So with the Kiwi looking weak, the pound New Zealand looks like it's going to eventually break out. I wouldn't want to be short. I know we're up against highs, but I wouldn't want to be short here. A couple other things that have happened while Stelios is here, before I turn back over to Stelios. Here's the US dollar Norwegian krona. We're touching the 618 retracement. We had is a bearish wedge. And why was it a bearish wedge? Because you had consistent highs, lower highs, consistent lows. You know, if you go look at the analysis here, the US dollar, Norwegian krona, wherever the hell it is. Okay, here it is. So, you know, the daily chart yesterday, bearish wedge, right? Today, broke down. Yeah, all the yen crosses just rallied. I have this Canadian yen's going up in my face a little bit here. Wait, this is, okay, here we go. Is stocks moving? Stocks aren't even moving. I don't even know why that is. So I'm going to have to short a little bit more here. 161% extension. Yeah, I don't know why market decided it wanted to pull up like that. Let's say all the yen pairs have moved up. Let's say here's the euro yen just boosted higher. Pound yen's ripping past the 88% retracement. Aussie yen just bounced, which I was short the Aussie yen yesterday at I short a couple of times yesterday. I wouldn't mind shorting that again, actually. Not right at this moment, but I'd like to get short somewhere up here. That's what I'd like to do. But a little bit of move in the Aussie yen. And here's the Canadian yen. Yeah, right up to there's the 78% retracement right there. And we're basically right there. So we'll see if that turns lower. I don't mind being short this, but I would like to see crude oil turn. Now, crude is pushing higher. And matter of fact, I think we're in a topping pattern here in crude, but we might be able to push back up towards 57 before rolling over. Man, these yen pair, what the hell just happened to the dollar yen? Let me see what's dollar yen's just ripping. Why is the dollar yen moving up like that? I mean, I know stocks are bouncing a little bit, but why is that happening? Yields pushing up. Yeah, it looks like yields are moving. Let's see what bonds are doing. Bonds are selling off a little bit. So you got yields. I have to go. I have my, where'd my yields go? Oh, they're there. Here's yields pushing higher. So obviously the dollar yen is following yields at the moment. Gold is moving lower. Was that a real spike in silver, Stelios? That couldn't have been real.
When? No, I didn't see one today.
Look at that.
Oh, no, I don't think that happened.
You know what? No, but it did. I have it on my Bloomberg charts too. Look at this.
Was it Asian? Maybe it was Asian trading.
I don't know when that was. So hold on. Let me get rid of that. That was, what a mess. That just whacked a bunch of stops. That's a 440. Yeah, it must have been an Asian trade. I guess it was. Wow. I have it on Bloomberg too, which is
it's usually the other way when it's an Asian trading, but yeah, there you go.
Yeah, it's wild. Anyway, yeah, so there's a little bit of an update on some of the pairs here. Let's see what that dollar Canadian's doing. The dollar Canadian's the Canadian's stronger. It's interesting. So we had this failure here in the dollar Canadian. I wouldn't mind being long the dollar Canadian down here. I'm not long, by the way. But I am short the Canadian yen. So I'm not. This was a failure of what I thought was a descending wedge, but it actually looks like it's probably more like a channel. It probably looks more like that, but that also means that we're closing in on channel support again. And if we're gonna, I thought yesterday we might be building this inverted head and shoulder pattern. I wasn't playing the Canadian yesterday, but might not be a bad risk reward long if you can get it just below these lows. So you know, like buying it right at 131 might not be a bad risk reward. You know, just take it as it hits new lows, and then you know try to trade counter trend. That might not be a bad trade, especially like I said, if we can get crude to reverse. Dollar MEX isn't doing anything. Swissy, a little bit of a sell-off below parity, but it's bouncing back a little bit here. Dollar yen continues to be strong. Don't know why. probably because we got a false breakdown below 110.50 and we're just popping right back up again. But other than that, that seems to be kind of the just a quick review of the majors right now, and I'm going to take a look at the cable.
Okay.
Cable's still pretty strong. So, Stelios, what else do we have going on? Like, what else is happening today?
Well, first of all, we had just now we had the goods trade balance out of the US, which came in at a record negative 79 billion. So trade wars working really well, it seems. But yeah, I can take over and talk a little bit about the pound, about the dollar. You know, I have a few things to say, so there's no no problem at all. Let me take the screen, change presenter. Show my screen.
Yeah, I can see it from here.
Okay,
and I want to tell everybody, come join us at the ForexAnalytix community. It's only $1 for 10 days. And also visit our sponsors, Forest Park FX. I was having an email communication with one of our clients, and she's having some broker issues. I'm like, have you reached out to Forest Park FX? And she said, yes, I did. And I'm like, that's awesome, because that's what they're there for. They are there to help our community and assist, finding you a broker that's best suited for your needs. And it's great. It's like another layer. If you ever have an issue, with, your trades or clearing, or, they can help you and assist you where, sometimes when you're out in the markets and you're trading from home and you're not super familiar, having somebody else to bend an ear and being able to leverage to try to, assist you with what you're trying to accomplish, which is ultimately making money. Having a teammate like Forest Park FX on your side, these guys, they just want you to succeed, because the more you succeed, the longer you are a client, the better off they're going to be as well. So make sure you reach out to the guys and gals at Forest Park FX. So with that being said, I'm going to turn it over to my colleague Stelios and also Coach. So thanks, guys.
Thank you, Blake. Thank you very much.
Hi,
so hey, Dale. So I thought
buddy?
maybe we'll have a look at the bigger picture, like I sometimes do. So, but before that, I just want to mention for the people who haven't been following all the details. We talked about the Cooper Amendment tomorrow, but the main event remains the vote on the 12th of March, which is the meaningful vote that they call it, which is on Prime Minister May's improved, or will it be improved? I don't know, but it's going to be a new proposal for a UK/EU agreement. And then if that fails, then the next day, the 13th, there's going to be a vote on a no-deal Brexit. So basically, UK Parliament will have to agree on a no-deal Brexit. And if that fails, then there's going to be a vote on the next day, so the 14th of March, which is going to be on a potential extension to Article 50. Now, the problem with that is that although May said yesterday or the day before, was it? I can't remember, that yesterday was, that she would be open to an extension. She did say that it was going to be a short one, but on the EU side, they were talking, I think the suggestion was 2 years. So even if it goes that way, it still has to be agreed. So it seems to be like one hurdle after the other in the UK. But I've said this before, I said it earlier today, in my opinion, the only negative, really properly negative sterling event is a no-deal Brexit. Everything else is going to be kind of a fudge. And, nothing changes from one day to the next. May was never going to say, that's it, we are revoking, Brexit is off, we're staying in the EU. No, she's never going to say that. But things always change gradually. And you are seeing small steps towards something which is, I don't know what's going to be, but I have this feeling, and I've said this for a while now, that there's going to be some kind of an agreement. Like Blake said, maybe it's not a good one, but it's in both sides' interest to have to avoid a no-deal Brexit. That's for sure.
Hey,
so
Stel, we've had a pretty good run in cable. Is
Yes.
it possible that cable is pricing in a decent deal, at least a decent percentage of it, or are we really going to have a major acceleration in your view? Like your long-term targets in cable are what? I know you've been constructive.
Yeah, the market is definitely already pricing in a chance of a deal. You know, there's no doubt about that. Otherwise, it wouldn't have moved. But
Right.
you know, if I look at, hold on, let me go to cable.
By the way, I like that dollar index chart that you put up there.
Yeah, we're going to go back to that afterwards. Hold on. So cable, you know, cable is kind of caught in no man's land right now, but it's coming up to a zone which has been there has been quite a bit of reaction of that zone recently. So I don't see a problem why it couldn't go back to the 140s, the low 140s, like we went back in 2018. But for it to really accelerate beyond that, it would take, I think, something more. So. So there's no problem at all with it going towards that level. Actually, my preferred sterling long is against the euro and the Kiwi, but that's a different one. And I've had this drawn for some time now.
You called the top up there around the 90, 89, 90 level up there. You know, so that's before there was, you know, a whiff of the potential of a deal. So I mean, that was a great call.
Well, you know,
I was wrong. I was wrong up there. I thought we were going to get a third drive, but I remember you making that macro call, and it was a pattern in play. And Steve and I were saying, "Oh, I don't know. It looks likely where your other, you know, up at the top. It looked like the blue line. That's what I was looking for. That was a great call, bro."
Well, you know, it could have easily gone up to those highs again. You know, you really can't tell with markets, right? You can make your best educated guess, but yeah, it's been going faster.
Anyway, the fact is you were bearish there. You were telling our subscribers to short it there, and that was a great turning point. So even macro guys are there for turning points. Normally, macro guys are, you know, trade the trend, right, bro? And you were contrarian up there, so kudos.
Well, sometimes when I feel strongly about something, I am a contrarian, but you know, other times you're right. You know, macro traders like myself, we usually miss the first part of the move, and then you get the rest of it.
Right.
But, so going back to this chart, I think that we can easily get to the 84 level, which is, again, you know, it's been tested a few times in the last 2 or 3 years. And then from there, who knows? You know, it will all depend on what happens, you know, what kind of deal there is, if there is one. If not, you know, if there's a no deal Brexit, we're going right back up to the highs. I mean, that's almost a given. But this is a binary event, and I'm still waiting to see how this is going to pan out. Now, the other thing I wanted to talk about. Okay, let's start with the dollar. I mean, whenever I try to look at the markets and various pairs, I always start with the dollar because, let's face it, it's the one that affects everything. And I usually look at the dollar index, DXY, but remember we said this before. This is 50% euro, 50% against euro. So this particular one. There doesn't seem to be a clear, I mean, I think it's going lower, but it seems to be kind of moving sideways over the last few years. I mean, in the grand scheme of things, I'm not talking about the point or 2 or 3, this, you know, one way or another. I'm talking about the big move. So the DXY index is one that I think is going eventually lower, but I'm not that, it's not one that I look at with as much interest as I look at others. For example,
I think that was a great long-term trend line, which actually lines up with some of the things that I am looking for in the dollar. If there's a continuation move on that chart, and you have that continuation move, that's a major trend line up around par. So, people are so bullish the dollar now. Can you imagine if we went up towards 99 or par, how one-sided bullish the dollar would be then? Yeah.
Yes. Well, the thing to ask ourselves is, if we think that the dollar is going to move one way or another, what is going to make it move? So if we think the dollar is going to depreciate, what's going to happen? I personally think that if we see a continuation in the numbers turning lower in the US, in all the leading indicators, PMIs, housing data, these are all turning, and there's no doubt about that. So, and you have GDP, which is still okay, but projections are going lower and lower. But GDP again is not a leading indicator. It shows you what's happened in the past. But I think that it's very easy. I see the scenario, not probable, but it's very possible that if the economy starts turning, I think the Fed's going to start cutting, and they're going to start cutting pretty aggressively. And guess who really likes low rates? A man of orange color. So I think that's what you need to ask yourself. If you're short the dollar, what are you actually looking for? You're looking for some kind of scenario like that. If you're long the dollar, you think that the market is wrong in pricing a slight chance of a cut. I think Fed Fund Futures are pricing a very small chance of a cut now, and you think that the Fed's going to continue or something like that. So as long as you understand what your risk is and what your trade is actually telling you, then you can handle it. One of the dollar pairs I really like looking at is the dollar yen, because it's been very well correlated with risk assets, with stocks and oil as well. So and if you look at the monthly chart, I mean, this is a very long-term chart. Okay, I doubt anybody looks at charts like that apart from me. But it seems to be like a triangle. There was a little bit of a breakout, but it's still coiling. And any way you look at it, I think the dollar is going to have to make a huge decision, and with it stocks as well. And remember, if we talk with Blake and Steve in particular, if Steve is bearish stocks, he thinks they're overvalued. I agree. I think in the very, very long term, stocks are always going to keep going up because of inflation. But in the short term, buybacks are stopping slowly. All these factors that caused stocks to rise over the past few years. Okay, some companies had good earnings and all that, fine, but earnings have been slowly dropping. So I think stocks are probably moving lower, and with that, I think the dollar yen will probably move lower as well. So I really, really like to look at this pair. And another pair which I looked at the other day, and the chart looked very, very interesting, is dollar CAD. And look at this.
Wow. Yeah, on the verge.
So that's the 200 weekly moving average. You have the 38.2 of that move, and you have this channel, and they're all confluencing. So here, I think if somebody put my gun in my head and say, trade this, I would probably buy it, because your risk reward is very defined, and it looks very good as a long. You know where you're wrong straight away. But if this breaks lower, well, what's the next target? That will mean that the dollar will be breaking lower against most currencies, and I think you could easily get into the mid 120s. But oil will have to also play ball. There's a whole lot of parameters that have to coordinate for this to happen. So that's another dollar pair that I look at. And one of my favorites, I think Blake looked at that as well, dollar Norway. I'm still bearish this one. It's been frustrating because the Norwegian kroner has been very unwilling to rally, against most currencies. And but we had again today numbers. We had core retail sales much better than expected. Unemployment ticked down to, I think, 3.7%. Any way you see it, Norway is doing very well, but the currency isn't yet. So it's another one I keep an eye on. And I am personally short Euro Norway, which I've said this before. And this has been working recently. Finally, I've got 2 positions on, and one I will take off when we reach this conference here, the low 950s. We're still a little bit away, but not too far. But then, my medium-term targets are in the 850s. I think this support zone here will be tested again, but it takes a lot of patience. The good thing with this pair being short is that you have positive carry, so you get paid for holding it, which is a nice thing. So that's the things I look at. Maybe I'll have a look at oil as well just before I go. And again, a long-term chart of oil. We had this huge move in 2014, which caught me by surprise, that's for sure. But then after that, oil is very interesting because it goes in streaks. It doesn't spend too much time going sideways. It either goes down, goes up, and then up and down. And it's I've had the bullish macro view for some weeks now, And yesterday I switched that back to neutral because I think that the potential of equities rolling over is becoming bigger and bigger. And as equities and oil are correlated, I think that and we're now close to the middle of this we call it a channel, call it whatever you want. I think that oil is no longer a clear, it doesn't have a clear bullish bias like it did, a couple of months ago, 3 months ago. So, that's another one that we have to look at, and that's pretty much it for me. I don't know. We've got a few more minutes left, but I actually have to run. So I don't know if there's something you can have a look at, or we have any questions. I'm not sure. Let me have a look at the. Is Blake still in USDMXN? I don't know is the answer. Yeah, we'll have to ask him. So, yeah, so that's pretty much it from me. I don't know if you.
Hi, Blake. I mean, hi, Phil. How are you? So on the crude, I missed a little bit of it. Constructive here, Stel. Could we get some type of pullback first, like to 50 again?
Well, I was saying just now that I was bullish the oil, but now with I think equities are. The chance of equities rolling over is getting larger and larger. So for that reason, and we know equities are correlated with oil roughly, not not 1-to-1, but I think it's probably prudent to be neutral at these levels and see what happens. So that's why I've switched. Okay.
Before you go, since you're bringing up equity, I just want to show one chart here that it's always easy to say, well, the market's overbought, it's run too far, but you look for things to build the case. So besides what I showed at the opening of a potential reversal week, S&Ps are 7 handles or so lower on the week. I want to show you this. And Steve was talking about this a lot. So we're threatening here in the VIX. In fact, it looks like we're taking out this channel and this moving average, and we diverge. So VIX is having a decent week. I mean, it closed at 1340 or so, 13.5 on Friday, and here we are at 15.5 without, any kind of fear or anything this week with the market. So what? It's lower. Every dip's a dip to buy. But to me, closing above this moving average gives you a shot for 20. Okay, so you could have a decent correction in equities with that going on. But if we get through 20, then I have some retracements. Why not halfway back from what happened in December on the VIX, on the fear gauge? 25, 61.8, 27.5, and that's how you get back under the 27 handle. And it wasn't doing this all this time till now. So I think that's building the case for a correction here. The VIX looks like it's coming out of a channel, wedge, whatever you want to label it.
Okay, cool. All right, yeah. I actually have to run, so I'll
okay, buddy. Adios. Remember, don't just count your pips, count your blessings, and see everyone later on. See you tomorrow. Adios. You're welcome, Hamid. Thank you, Louise.